Discover the secrets of the legendary investor Warren Buffett and his unique strategy that transformed the financial landscape. In a deep dive into the minds of successful investors, we explore Buffett's perspectives on the mindset needed to navigate market fluctuations, his ongoing optimism towards index funds, and his passionate advocacy for stock buybacks. Don't miss this opportunity to learn from one of the greatest investment masters. Subscribe now to the channel and unravel the mysteries behind the Warren Buffett investment strategy. Your journey to financial success starts here.
5. Warren Buffett advises investors to buy stocks only if they are willing to hold them for an extended period, likening the strategy to maintaining a farm and not constantly monitoring stock prices. Warren Buffett, renowned investor and entrepreneur, shares insightful guidance for those looking to invest in the stock market. He emphasizes the importance of a patient and long-term approach, comparing it to managing a farm where the focus is on maintenance and growth over time, rather than immediate reactions to market fluctuations. The advice underscores the need to be financially and psychologically prepared for inevitable fluctuations in stock prices, including the possibility of substantial declines, an intrinsic aspect of the dynamic financial market. Additionally, Buffett discourages the practice of trying to time the market or predict short-term movements, stressing that true success in investing lies in the ability to maintain a balanced mindset and resist external influences. He warns against the relentless pursuit of the perfect moment to buy or sell stocks, noting that such an approach often leads to impulsive and suboptimal decisions. The experienced investor highlights that market volatility is inherent, and the real advantage lies in the ability to stay true to a well-founded strategy.
4. He emphasizes the importance of being financially and psychologically prepared for inevitable fluctuations in stock prices, including the possibility of a 50% or more drop. Warren Buffett, an icon in the world of investments, highlights the crucial need for financial and psychological preparedness when facing the unpredictable scenario of stock price fluctuations. The notable investor emphasizes that market participants should adopt a resilient approach to the inherent oscillations in the financial environment, aware that significant drops, potentially reaching 50% or more of the value of held stocks, may occur. According to Buffett, such awareness constitutes a fundamental pillar for committed investors facing the complexities and challenges that permeate the investment universe. Buffett's caution goes further, discouraging attempts to time the market or predict short-term movements. He emphasizes that lasting success in the investment world requires not only a solid financial foundation but also a balanced mindset capable of resisting external influences and avoiding hasty decisions. The emphasis lies in the importance of maintaining a well-founded strategy and resisting the temptation of impulsive reactions to market volatilities. Regarding market volatility, Buffett highlights that it is intrinsic and inevitable, advising investors to adopt a more long-term centered stance. He reinforces the idea that the real advantage is in possessing the ability to remain true to a robust strategy, resisting momentary turmoil, and keeping the vision towards long-term investment goals. Amidst his insights, Buffett points out that preparation and understanding of market fluctuations are essential to cultivate a more solid and resilient approach. The investor urges market participants to cultivate a deep understanding of stock market dynamics, reminding them that resilience in the face of financial adversities is an invaluable virtue.
3. Buffett dismisses attempts to time the market or predict short-term movements, emphasizing the need for the right mindset to avoid impulsive decisions based on market trends or third-party advice. Warren Buffett, a prominent figure in the investment universe, categorically rejects the practice of timing the market or anticipating short-term movements. The renowned investor emphasizes the imperative of cultivating a disciplined mindset capable of resisting momentary market fluctuations and avoiding hasty decisions based on fleeting trends or external advice. For Buffett, the true key to investment success lies in maintaining a consistent and strategic approach, detached from temporary volatilities and driven by a deep and solid understanding of market conditions. Addressing the characteristic instability of the financial market, Buffett highlights the urgent need for investors to develop a long-term perspective. He emphasizes that the real value lies in the ability to resist immediate pressures and maintain a balanced view aligned with long-term investment goals. His guidance reinforces the importance of refraining from impulsive reactions, reminding that investment success is built on solid foundations of discipline and understanding of market nuances. In Buffett's understanding, resisting the temptation to follow the ephemerality of trends is essential for making conscious and strategic decisions. He warns against excessive reliance on external advice, emphasizing the need to cultivate an autonomous understanding of market dynamics. The pursuit of an informed and independent mindset emerges as a fundamental piece in making sustainable and informed decisions in the complex world of investments. In his analysis, Buffett underscores that by rejecting the pursuit of quick profits and adopting a long-term perspective, investors can not only withstand market fluctuations but also strategically position themselves for lasting success in their financial endeavors. His approach highlights the importance of steering clear of the traps of momentary trends and focusing on building long-term wealth, grounded in solid principles and informed discernment.
2. Regarding index funds, Buffett expresses confidence in their long-term viability and rejects the idea that the era of passive investment is over, advocating index funds as a sensible investment strategy. Regarding index funds, Warren Buffett unwaveringly expresses confidence in their sustainability over time, categorically refuting the assumption that the era of passive investment has come to an end. The respected investor vigorously advocates for index funds as a pragmatic and rational investment strategy, countering speculation suggesting the decline of this model. Buffett's confidence lies in the proven effectiveness of index funds in comprehensively reflecting the overall market performance, offering investors a stable and efficient approach to the inherent volatilities of the financial landscape. Addressing this theme, Buffett reiterates his belief that index funds represent a solid option for those seeking consistent returns and a safer approach in the face of market uncertainties. He highlights the strategy as a smart way to participate in the overall market growth over time, underscoring the importance of refraining from speculative moves and adopting a stance aligned with long-term trends. Buffett's view not only validates the effectiveness of index funds but also counters the pessimistic narratives suggesting the decline of this investment approach. The experienced investor emphasizes that, by investing in index funds, investors can benefit from the automatic diversification provided by these investment vehicles, thereby reducing exposure to specific risks associated with individual stocks. This pragmatic approach, according to Buffett, aligns with the principles of efficient portfolio management, mitigating the inherent risks of excessive concentration in individual assets and promoting a balanced allocation of resources over time. Ultimately, Buffett's defense of index funds not only reinforces the ongoing relevance of this strategy but also invites investors to adopt an informed and long-term mindset, steering clear of ephemeral trends and embracing a solid and grounded approach to achieving sustainable financial goals.
1. Buffett advocates stock buybacks, stating that they are a simple and effective way to distribute money to shareholders. He argues that criticisms against buybacks often have political motivations and that companies should repurchase shares when it is advantageous for shareholders, maintaining a price-sensitive approach. Warren Buffett, a prominent figure in the investment world, vehemently advocates the practice of stock buybacks, considering it a straightforward and effective approach to distributing resources to shareholders. The respected investor argues that criticisms against this strategy often stem from political motivations, emphasizing the need for an unbiased analysis free from external considerations. For Buffett, companies repurchasing shares should do so judiciously, seizing opportunities when this practice is advantageous for shareholders, aligned with a sensitivity to market values. Buffett's perspective on stock buybacks highlights the importance of understanding this practice as a means of efficiently distributing surplus cash to stakeholders. He clarifies that by repurchasing shares, companies not only benefit existing shareholders by increasing their stake in the business but also demonstrate confidence in the intrinsic value of the company. Buffett urges companies to adopt a price-sensitive approach when conducting buybacks, ensuring that this strategy is implemented when market conditions are favorable, providing tangible benefits to investors. In Buffett's understanding, stock buybacks should not be viewed as an immoral practice but rather as a strategic tool to strengthen the company's value and reward shareholders. He emphasizes that this strategy, when well executed, can be an effective way to optimize the company's capital structure, balancing the distribution of resources and preserving capital for future investment opportunities. Buffett's stance on stock buybacks reflects not only his pragmatic view but also his advocacy for companies' autonomy in managing their resources for the benefit of shareholders in the long run. In summary, Buffett's approach to stock buybacks highlights the importance of thorough analysis, aligned with a deep understanding of market conditions. His guidance offers a balanced perspective on this practice, inviting companies to adopt an informed and strategic stance to maximize value for shareholders and strengthen the company's long-term financial position.
In a financial world filled with nuances, Warren Buffett's wise words echo as a guiding beacon. As we explore intricate investment strategies, we become immersed in valuable lessons of patience, resilience, and discernment. If this dive into the investment universe has illuminated your understanding, I invite you to subscribe to the channel, leave a like to strengthen our learning community, and share your comments. Together, we will continue to unravel the secrets of financial success. Don't miss the opportunity to be part of this enriching journey.